Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. Another beautiful day here, and you are listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci, and we are here to talk about the markets. Had a nice little run this week. We're going to talk about what we're doing here at the Advanced Retirement Group with our clients, and looking for some protection also. So there's a whole lot to talk about. So get ready. Welcome to the show.
Yeah, good morning, Southwest Florida. I'm John Antonucci here alongside Southwest Florida's certified financial planner professional, Alfie Townsend. And today we've got a powerful topic lined up for you. As always, we'll start by talking about the economy and the markets, because we know they play a huge role in shaping your financial decisions. But beyond the ups and downs of the market, your financial success is built on having the right plan in place, just like building a house. And Alfie's expertise is all about creating a solid foundation, putting up strong walls, and constructing a roof that can withstand even the toughest financial storms. Alfie has put together a tax map that you really need to get a hold of, especially in an inflationary environment, and taxes about to go up probably. He has a tax bill calculator, and if you haven't used it yet, now is the time to pick up yours for free. Be one of the first 9 listeners and text the word SAVE, S-A-V-E, to 239-747-1077 and get personalized insights on how to reduce your tax burden. Don't let higher taxes sneak up on you. You know it is a ticking time bomb. And whether you're preparing for retirement or you're already there, Alfie has strategies that can help keep more money in your pocket. Call the operator, ask for the tax map, or text the word SAVE to 239-747-1077. Again, that's SAVE to 239-747-1077. And Alfie, the Feds, everybody thought he was going to cut it 25 basis points, but on Wednesday cut it by 50 points, and the markets really responded well, didn't they?
A little hawkish. It was good out there. We were, like you said, at 0.25 they were thinking, but it ended up being 0.50, so 0.5%. It was strange because the first day after they did it, the markets did not, it reacted positive, and then by the end of the day, it was a negative. The Dow was down, S&P was down, NASDAQ was down, and we were thinking, well, why is it down? Are the Feds lowering it more than anticipated because the economy is worse off than anticipated? So, the good thing about it, the next day the markets had a nice little rally, a big rally, and that's drove the markets back up into all-time highs again. So we have to really just look deep into this and why the Feds think that we need a 0.5 point rate cut. Now, the good thing about it, when they started raising interest rates, they were doing it very slow. And a lot of the money managers that we deal with and the economists, they said it would have been better off to pop it up like 1% right up front versus a quarter, and that's maybe what they're doing, is doing a 0.5 point now, and then they'll probably leave it at 0.5 point till the end of the year.
Right.
They might not do like a quarter, and do it slowly. They might do that pop and then see where it brings for the next, October, see what October brings. But we are in an election year. Now, is this political or not? That's the other thing people are starting to ask. Is the Feds trying to get Kamala in, or is this something that he felt that the economy needed because things are slowing up a little bit?
Yeah, definitely. And it's something to see that, like you said, you can either rip the Band-Aid off real quick and get things moving again. But this is going to bode well for mortgages, car loans, things of that nature, which hopefully will spark that around the country, because there's not a whole lot of inventory in the real estate market. So people just aren't buying homes or getting out of the low-cost mortgages that they're in.
Yeah, that's what's happening. And they're staying in the homes because of the low energy or low interest rates that they have on their home. So this will maybe, it's going to take quite a few more cuts before people get out of their 3% interest rates into something that's, 5%. But it is, heading in the right direction. Now, Powell says that this recalibration on these rates, they look back to 1995 to boost the stocks. Now, remember, 1995 was a good year in the market. So, in the 90s was a good year. That was Bill Clinton's time, and the markets had nice rallies during that time. So this is something that could boost the market for a while. And but we're going to talk about debt today, because it's not just the government debt that we have, John. It's the credit debt. And you brought to my attention something. We're going to talk about that. But the people that have debt, credit card bills, is over $1 trillion of debt. I think it's 1.3 trillion. It's the highest in the history of credit card debt. Now, the good thing about it, when you lower interest rates, those rates might come down too. They should come down, but they're at right now at 21%, 29%. These are credit card debts that are, people are just paying interest right now. They're not paying principal. So this is not good for the economy either.
Yeah, interesting point. And Donald Trump said that he's going to cap interest on credit cards at 10% until Americans can get under control, which is a great plan. And you have her, who's 64 days into running for president, who has not even had a press conference. We don't know what her policy is to actually bring down inflation or spark the economy or to get the economy going again. And really, you need a plan, because without a plan, you can't succeed.
Yeah, we absolutely need a plan. And we were last week talking about the fiscal house and how we build portfolios and how we build things around here, for our clients to get them to and through retirement. But if you haven't really had your portfolio or anything checked out, this is the time to do it. We have what we call the election protection portfolio, and people are, even our clients are there's some concern of, if Kamala gets in or during the election, should we have some type of portfolio that has some downside protection? And so we built a portfolio that is called the election protection portfolio, which consists of some buffer ETFs and consists of some bonds. And so you're not going to get hurt, but you can still make money. And that's what it's all about. You can still make money. You're not going to make as much when the market's running high, but when that market is running down, you're going to say, man, I'm glad I'm in the election protection portfolio, because if I wasn't there, I'm down 25% that I don't have to make back up.
Yeah, that's the great thing about dealing with the Advantage Retirement Group and Alfie Townsend. He has over 40 years experience as a certified financial planner professional, and he's a fiduciary, which means his responsibility is towards you, the client. And he's put together this election protection portfolio that can protect a majority of your downside. And you really want to find out about it. Your advisor probably isn't talking about that. Maybe you've outgrown your advisor, or maybe your advisor isn't even talking about things that could come up around the turn. Alfie's ahead of the curve, and that's why you need the retirement simulator process. You owe it to yourself to come into Fort Myers or Naples and sit down with him. He'll take a deep dive into your current portfolio to see what's really going on. He's going to make sure that you're diversified correctly, that you're allocated properly, that you're not taking undue risk for the amount of return that you're getting each and every year. He's going to expose all the hidden fees inside your portfolio that could be eating up some of your returns. And he's going to take you back 5 years with your portfolio, put his side by side, and you're going to have your eyes right on it to see exactly how his would have performed compared to yours. Listen, he can only handle 9 people each week to do this deep dive. It's very labor intensive, and his team and his staff will take a deep dive into your portfolio. All you have to do is text the word VISIT to 239-747-1077. Call the operator right now. Don't wait till the end of the broadcast. Pick up your smart device. Call the operator and ask for the retirement simulator process, or text the word VISIT to 239-747-1077. Alfie, people really need to come in before the election and get a review, don't they?
Oh, absolutely, because it's like I always tell our clients, if you're going to take a long trip, it's a road trip, the first thing you're going to do is make sure you have oil change and you check your tires and make sure your tires are good, because the last thing you want is to get on that road and have a blowout. And you could have done something about it. You could have got your tires fixed or really replaced before you went on that trip, and you knew that it was a very good possibility that it could have a blowout. Same thing with your portfolio. It could have a blowout, and it could be a big blowout. So you want to make sure you have some type of protection. devices inside your portfolio. And that's exactly what this portfolio that we design, and that's why we call it the election protection portfolio. So we will like to share that with you. We'll be right back.
Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. You know, Alfie has over 40 years, it's hard to believe, experience in this industry of financial planning. He's a strategist, and he's put together different products and services that will help get you to and through retirement. And you know what? Alfie's book that he just came out with was in high demand last week. Due to popular demand, Alfie is offering it again, and a complimentary copy of his book awaits you. To claim your free book, all you have to do is call the operator and ask for it, or text the word book, B-O-O-K, to 239-747-1077. It'll take you to a landing page. You'll be able to get that information and get that book mailed directly to you. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many, many stories about investors that he has helped save over his 40-year career. That's why he named this broadcast Saving the Investor, in order to save you, the investor, from the pitfalls, the schemes, the traps of Wall Street. To get your free book complimentary, just text the word book to 239-747-1077. We're going to be talking about building your fiscal house on a rock and not on sand, so that it stands the test of time. And Alfie, the economy is responding. I don't know if it's Biden's policies. I think it's more of capitalism and the free markets that we have here, which is really driving the economy. But we see an upside, don't we?
We do see an upside. Now, inflation is coming down a little bit now. It's about 2.5%, which is much better than what it was at 9%. But people are still feeling it in the grocery stores, at the restaurants, and the gas. So there's still, oil, energy prices are starting to go back up again. So we do have, concerns with the economy still. But that's where the feds are more concerned, is the labor, is not so much inflation, but the labor market.
Well, maybe you could talk about this, because Fox put out a real number from Pennsylvania, which is probably going to be the prize that's going to put someone in the White House, either Kamala or Trump.
Yes.
And they're showing since January 2021, inflation really in Pennsylvania is 18.9%, and the average family in Pennsylvania is paying $984 a month more than they were before 2021. I mean, $1,000 a month, $12,000 more a year. That's got to put a hurt and a squeeze upon Pennsylvanians, wouldn't you say?
Yeah. Now, this is Pennsylvania, so every state's different, and this is probably middle of the road right here. And so if real inflation is 18, it's not that 2.5%. It's 18.9 when you add groceries. And look, your car insurance is over 50% more than what it was.
Why is that? I don't understand that.
It's because you got the stealing cars. You got a lot of car theft right now going on. You have a lot of illegal people getting driver's licenses, crashing their cars, and don't know how to really drive. So you have a lot of things that are happening with insurances. And then here in the state, Florida, we have homeowners insurance is through the roof.
Right.
Companies are moving out of it. You said something about Trump wanting to cap these credit card bills interest to 10 from they're getting 20 and 30%. That would be amazing, until people get back under. What I like about Trump is that he gives you ideas that work.
Solutions, real
solutions. He's giving you, these are talking about now when you have no tax on overtime. That's something that you would think, well, you're going to be losing a lot of money, but now people will want to work overtime.
That's an
incentive. People want to work overtime than not work.
Sure.
So the productivity will just go through the roof. You have productivity that will be better. You'll have more money in your pocket to spend money. So when the economy's doing good, when you have less taxes overall, even less federal taxes, there's more money coming into the government because people are spending more.
Right.
People are making more. So, that's the difference between a Republican and a Democrat is, tax, where a Republican is lower those taxes, have more money, and more money will come in. And Reagan proved it, and Trump proved it. that it happens. More money comes into the government when you have a good economy and people working. So, you just got to, I hope people vote with their wallet, because look at Pennsylvania. If it's cost them $1,000, the family, $1,000 a month extra that it was, when Trump was in office, people vote with their wallet.
Sure.
They're not voting on personality.
Right.
They're voting with their wallet. And that's why, the blacks are, he's like 29%, which is unheard of.
Yeah.
29%. And then Hispanics are up, so because they're losing jobs from the illegals coming in. And so there's a whole lot of, I pray at night. I pray at night, every night, for protection for President Trump, and also that he gets in, because I think our country absolutely will be hurting big time if he doesn't get in.
Yeah, well, like you said, it's a clear line, and not even, like you said, personalities, parties. I mean, if you want more regulations, if you want more taxes, if you want more government involved, you vote Democrat. That's a no-brainer. And if you want, less regulations, free markets and restrictions taken off to unleash this economy that was the best it's ever been in history under his administration, you vote Republican. I mean, that's pretty much it. I mean, the other policies, we can debate them, but I mean, really, we've got to get this country back on track, or else we're not going to have a country, are we?
And it's America first. I mean, and there's nothing wrong with that. I'm sure European, thinks that European first.
Sure.
That's the way it should be. It's your home first, and then, what's left you help. It's just a basic. It's very basic, and if we can get him back in, I think you're going to see an economy that can just flourish. You're going to see the stock market. It's rock and rolling now, but I think you're going to see a 50,000 point Dow. You're going to see well over 20, probably about a 25% NASDAQ. You're going to see innovation. You're going to see interest rates going down. You're going to see home just being built like crazy. It's going to be a great thing.
Well, you talked about it earlier, the credit card debt, and under Trump, there was a 5% uptick in credit card debt, but under Biden's administration, it's up 48%, almost 50% of
we got to talk about
cardholders. I mean, that's telling you and telling me that at 48%, most people are putting their everyday essentials on their groceries, toiletries, all kinds of things. I mean,
that's why the economy is doing good under Biden, is because people are still spending. They have to, and things cost more. But 48% more debt under Biden and Harris than at 5% on when it was Trump. This is a big. When you have debt, the Bible tells you, debt will strangle you, and you don't want to be in debt.
The borrower is servant to the lender, and these people are servants to these, like you said, 30%, and they have no choice. They've got to put food on the table. Yeah. So they can't pay cash. They're charging it, and that's going to affect the economy, isn't it?
Oh, it's going to affect them when you have that high interest rate of over 20% that they're paying on their debt. So they're just paying the interest, minimum payments, which is a part interest, not even all the interest. And it's like our government right now. Our government's in debt with 30, 35, 36 trillion dollars. We're paying $1 trillion a year on debt. That's more than really the military budget that we have. So this is things that we have to get taken care of.
Yeah,
no question about it.
Well, it's not a rosy picture, but Alfie does have a plan and a strategy. And, if all these economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. Inside his toolkit that he's customized especially for you, the investor, there's a wide range of materials such as, will your money last as long as you do? Are you paying too much taxes in retirement? If you can reduce your tax liability, that's going to put more money in your pocket each and every year. Social Security Decisions Guide, and will a recession rob your retirement? To get Alfie's free complimentary toolkit, all you have to do is call the operator and ask for it, or text the word KIT KIT to 239-747-1077. Listen, pick up your smart device right now and text the word KIT to 239-747-1077. It's time for a worry-free retirement. Get Alfie's Toolkit today. Simply call the operator or text the word KIT to 239-747-1077. And Alfie, all these products that you complimentary give to people really add value to their investment strategy and their portfolio, doesn't it? They don't even have to be a client to get that, do they?
No, they don't have to be a client. They're going to get this, and then they're going to look at it and say, you know what, this is some good information. Let me see what Advantage Retirement Group is doing different than our group. That's it. It's a very that's what I always I look at things where if we give you good information and good service and unbelievable money managers, you want to look at it. And the other thing is strategies, because if you don't have the strategies to get to and through retirement, when I'm talking about strategy, I'm talking about saving money on taxes, put money away that you can take out tax-free, because market or taxes are definitely going to go up in the future. There's no ifs, ands, or buts. They're going to go up. So be prepared, and let's get you prepared here at the Advantage Retirement Group. We'll be right back. Good morning, Southwest Florida. You're listening to Saving the Investor radio show, and we have a lot to talk about. We're going to bring back the fiscal house. This is a plan that will get you, it says, John talks about it all the time, you have to build your house on really stone. You don't want to build it on sand. And the same thing when it comes to a retirement plan, you want to build it where it is solid and it can withstand different things that are out there. So welcome to the show.
Yeah, good morning, Southwest Florida. According to a recent study, 73% of Americans rank their finance as their number one stress in life. And if economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. Inside Alfie's toolkit, it's going to give you a wide range of materials such as, will your money last as long as you do? Are you paying too much taxes in retirement? Alfie has strategies that can reduce your tax liability, putting more money in your pocket in your retirement years. The Social Security Decisions Guide, if you have not taken it yet, he has a specialized program that will tell you the most opportune time to maximize your Social Security benefits. And will a recession rob you in retirement? To get Alfie's free toolkit, simply text the word KIT to 239-747-1077. Again, if you don't text, call the operator and ask for Alfie's free toolkit, 239-747-1077. It's time for a worry-free retirement. Get Alfie's toolkit today. It's going to add value to your life and also to your retirement plan. Last week we began the conversation, Alfie, on building a fiscal house. And you had so many callers that responded asking us to continue the conversation. Yeah. So let's recap. What really is a fiscal house, and why would someone really need to build a good, strong fiscal retirement plan?
Okay, so we're going to talk about a fiscal house, and I want to also talk about a fiduciary. Yeah. And so when you look at a financial advisor, and are they a fiduciary, or are they in just insurance where they sell you products, where they sell you just annuities, and they're not, they're not considered a fiduciary. A fiduciary is someone in the financial field, and there's different ones. There's, a lot of brokers fall under the suitability where they could sell you a product, but they are not, it might be suitable for you at the time, but if it loses, it's not it might not be of your best interest. Okay, where fiduciary has to be of your best interest. So I'm going to have John read a short definition of what a fiduciary is, and I'm going to talk about how it implies how we use it for our clients.
Yeah, fiduciary really is going to benefit you because it's someone who manages money or property for someone else, if you haven't heard this term, fiduciary. And when you're named a fiduciary, like Alfie would be, and accept the role, you must, by law, that's important, by law, manage the person's money and property for the benefit of you, not himself.
Yeah, exactly. And that's why I wanted John to read that, because it's something, and I don't talk, we had one of our listeners talk to my son at one of our events, said, Alfie and John, I wish they'd talk more about fiduciary, because he doesn't, I know he is one, he doesn't talk too much about it. And the reason I don't really talk too much about it, because I feel like everybody should be a fiduciary, meaning that you do what's right for the client.
Right.
So I mean, it just comes easy and natural to me. But maybe we should talk more about it because, as a certified financial planner professional, CFP professional, that is the highest level of fiduciary. If I mess that up for a client, if I do something that is unethical, if I do something that is not to the client's best interest, I would lose my CFP designation. And for me to lose my CFP designation would be like a doctor losing their medical practice where they could practice, or an attorney being disbarred.
Right.
Because a CFP is the highest designation, so you're not going to. I'm not going to put that in jeopardy ever. And a matter of fact, the definition from the CFP board of fiduciaries is used by a lot of, like the SEC and what fiduciary definition means. And like what John read is what it means. You have to look out for the best interests of your clients. And that's what we do here at the Advantage Retirement Group. And I do take that very seriously because, we don't put you in. I want to be, there's a lot of times, John, people call our office and they want to show us a new product and they want to show us the hottest thing out there. And we tell them really don't even, we'll listen to them and say, well, thank you, but that's too risky. I don't want to put that with my clients that they could lose money. And so many people that we deal with a lot would come in with REITs, that these are private REITs that you can never get out of, and they sounded good. There was big commission in them though. They're big commission in these REITs, and then they never went public, so they couldn't even get out of them. So they have this money that's just sitting there that they can't touch, and they put in $100,000. It's worth like $15,000 now. So we do not want to put any of our clients in things that I'm not in.
Right.
Okay. So if I'm in it, that means it's good enough for me. It's good enough for our clients. And so there's some risk things that we're not going to put with our clients. So now, do we have things that the clients can lose money? Yes. When you're in the market, you can definitely lose money. But when you're dealing with portfolios, you're dealing with, 50 companies, 30 companies. You're not dealing with just one company. We have one company that could falter, but it's not going to bring down your lifestyle, because it's not tied to just one thing. So, I did want to talk about that before we go back to the fiscal house, because the fiscal house is very important. That's a we're building built a house, and the first thing you look at is your blueprints, and you got to get them engineered, and you have to make sure that that it's solid. It's going to withstand hurricanes. It's going to withstand the climate that we have here in Southwest Florida or anywhere you're building a house. You want to make sure it's right for the where you're building. So your foundation is, when you dig those footers, John, you got to go deep. You got to pour concrete in there, and then your ground, your footers in general, your first floor is going to be, filled with concrete and rebar, because that's what holds up the whole house.
Right.
And so if you think about that, you think about you have to have financial plan, something that is solid, that is not at jeopardy of the market. Right? You have to have something that's solid. That'd be your savings, your things that you can't lose money in. That's going to be your foundation. And then you start building your walls. And your walls are going to be things that are going to be more like a bond, like a moderate portfolio. It could be a little bit of a growth portfolio, but it has protections. And there could be a buffer ETFs that you could make 15, 20%, but it would protect it for 20% down. So you have protection in the walls. But where you're going to take the biggest risk would be your roof, right? And what always blows off in a storm?
Yeah, right.
The roof.
Yeah.
The shingles start blowing off. And, I just remember Ian.
Yeah.
I was watching my canopy blow off at my my boat canopy. I was watching just everything starts blowing up.
And nothing you could do about it.
And nothing you can do about it. But what doesn't blow off is your foundation.
Yeah.
Doesn't blow off. And that's so you have to have a strong foundation. So when we talk about a fiscal house, it's really putting a plan that looks at different asset classes, looks at different vehicles inside that will give you that guaranteed income. You know what people's one of their number one concerns in financial planning is outliving their money.
Right.
It just that just comes to them and said, I just don't want to outlive my money. People are living longer now, and I want to make sure I have money for my life, and I always have that check coming in. So that's part of your foundation, to have that guaranteed income coming in for the rest of your life. And some people have that already with a pension. So they might have a pension, and interest rates are going down a little bit, but they're still high enough right now that you can get some good interest and lock in some higher income now than you could have 5 years ago when interest rates were low. So this is the time to really get maximum income and have some protection for your retirement.
Yeah, you really need a plan. And Alfie is a fiduciary, as he said, which means his responsibility is towards you. He doesn't market time, stock pick, or track record invest. He's going to add value to your life. Matter of fact, he's a certified financial planner professional with over 40 years experience as a certified planner. And if you have not had a review yet, maybe it's time to get a second opinion. Maybe you've outgrown your advisor. Maybe your advisor isn't telling you the different types of products and services that he offers that can protect you on the downside with some of your money. And you may be looking for a way to maximize your retirement plan and don't have a strategy yet. You need to come in. Alfie has what's called the retirement simulator process, and he'll walk you through it step by step. Basically going to put your portfolio next to his and take you back 5 years prior. And you're going to see exactly how his would have performed next to yours. He's going to make sure that you're allocated properly, that you are completely diversified. Diversified is not being in the S&P or just in the NASDAQ or, in the Dow. He's going to make sure you're diversified correctly, that you're not taking undue risk for the amount of return that you're getting. And he's going to expose all the hidden fees that could be eating up your returns. There's fees inside a lot of these mutual funds that you might be holding that you don't know are taking away from your yearly returns. Let Alfie Townsend be a second opinion. Meet with him in Fort Myers or Naples. Listen, he can only do 9 callers. You need to be one of the first 9 callers right now in order to get in this week's appointment schedule. And give him a call at 239-747-1077. Matter of fact, you don't even have to call. All you can do is text the word VISIT, VISIT, to 239-747-1077. Again, text that word VISIT to 239-747-1077. You owe it to yourself to get a second opinion. You have everything to gain and nothing to lose by doing that. Again, call the operator right now, 239-747-1077. Stay tuned. We're going to be right back right after this break, so please don't go away. Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. Alfie has over 40 years experience, and in his 40 years, he has compilated a lot of stories in his book that is in high demand each and every week. And due to popular demand, Alfie is offering it again for you. A complimentary copy awaits you. To claim your book, all you have to do is call the operator and ask for Alfie's book or text the word book to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on valuable insights, including many, many stories about investors that he has helped save over the years. Simply call the operator or text the word book to 239-747-1077. We're talking about building a fiscal house, a strong financial house. And Alfie, you have a big picture that you look at that really enables people to understand what you're really talking about when you talk about building this type of retirement plan.
So let's look at the whole plan. We talked about the fiscal house. This is the system that we use, and it starts with a strategy. The blueprint for your home is really a holistic approach. We're looking at everything, not just part of it. We're looking at everything. Your wills, your trusts, you have your legacy. Everything is included in that. Your foundation, that's your bedrock of your stability. That's your low risk, high. We want to preserve your assets in that. We don't want to put that at risk. That's going to be your foundation, and then your walls. That's where you're going to take a little bit of risk on that, and you're going to be, have a balanced portfolio. You're going to have, you could have a growth portfolio in there, but your roof, we talked about that earlier. Your roof is the one that always takes a hit in a hurricane. But if you have a good roof now, roofs are getting better. As you're not, we have a metal roof on ours, so that's. I saw all the metal roofs, and with Ian, were staying intact.
Oh yeah, that's the best you can get.
And that's so. Again, your metal roof, but that's going to be your higher risk assets. That's going to be where you want to, hey, you know what? I'm going to put a little bit of, let's just say a stock that's going to be a high flyer, that one that can make you a lot of money or lose your money, but it's not going to change your lifestyle. So you put your risky stuff in there. And then fencing is, protecting your loved ones, creating a safety net. That is a you think about the fence around the house. That's saying this is your house, stay out, but you want your belongings and your stuff to go to that's a legacy play. What goes to your that's your wills, your trusts. Those are things that you control. And a trust, I always say, you control when you're dead and gone, you can still control your assets if you have it set up right. And that's what a lot of people want. They want to make sure that their belongings goes to their family, their bloodline. And so, we have clients that come and say, I love my my son-in-law, but if they get a divorce when I'm no longer here, I don't want him to have that money. I want it to go to my daughter and my kids, my grandkids. And you can do that. You can control it. So these are things that we deal with on a daily basis. And so if you think about a comprehensive financial picture, many people have things scattered, investments across different accounts. They have it everywhere. They don't really know where everything is. And we use something that's called eMoney. And it is a very comprehensive program that you can put everything in. So you could have accounts, and you can have a bank account, you can have your credit card accounts, you can have accounts with us, you can have a personal account over at Charles Schwab, and let's say we use Fidelity. You can put them all in this one account and see your whole picture, and that is what you want. That's what you want. Is you want to have that the headquarters, is at your fingertips on your online, instead of having to go through all these accounts to open up little things.
Yeah, and you made a great point there, because you mentioned, Schwab or Fidelity. A lot of people might be listening saying, do I have to give my money to Alfie Townsend? But they never write a check out to you. I mean, one of the responsibilities of fiduciary is that you have custodians, right? Maybe you could talk about that and how that's part of really building a fiscal house, because we've heard of the Madoffs and different people, even in Naples, that have taken a lot of people and retirees' money.
Absolutely.
You have a safe way of protecting them, don't you?
Yeah, so, our company, the Advantage Retirement Group, we are just, we are your advisors here. Not just, but we are your advisors here. But where we put our clients' money is going to be either it's going to be a custodian, like a Charles Schwab, or we use Fidelity mostly. I'd say Fidelity is probably 95% of our clients, 5% for Charles Schwab. We used to use TD Ameritrade. That was very good in technology. Then Charles Schwab bought them, and so. But anyway, where people tend to like Fidelity better, so we use Fidelity. And the reason why we use Fidelity is that we'll use our managers, our portfolios that put into Fidelity. That Fidelity doesn't have. We don't use their funds or anything. We just use them to make sure that your money is safe. Make sure that they would never send money to us.
Right.
They would only send money to you. Now what we can do is we can change portfolios, but we have no access to your money. So that's what you always want. If somebody said, my advisor, I make it out to their firm, I would never want anything like that, because then you lose that protection.
Right.
So you always have to have that. And when you have accounts spread all over the place, it's not really the best thing, because it's hard to put a plan together if I don't know what your other advisor's doing. So that's why a lot of times, if you have an advisor up north and you're here full time, a lot of times people, say, I want to move my monies here in my hometown where I live, where I'm here more than I am up north, and I'm going to be retiring here full time. So, a lot of times, John, people outgrow their advisors, and if they outgrow their advisors, if you have or not, because you're not really getting the service. You might be getting service, but you're not getting the advantages of tax. Are they talking about Roth conversions? Are they talking about protecting your money? Are they talking about buffer ETFs? Are they talking about structured notes? Are they, I know when people outgrow their advisors is when they say, why didn't my advisor talk about the things you're talking about?
Right.
It happens all the time. And that's when you outgrown your advisor. But again, if you have an advisor up north and you're living here and you haven't set up an appointment with us, that's a great time to set up an appointment, come in and have a home. I'm here full time. I'm not here. Some advisors come in town when the snowbirds come in. I'm here all the time. We're here all the time, full time. So, it might be a good time to set up a time to come in.
Yeah. Why don't you give Southwest Florida's premier certified financial planner professional, Alfie Townsend, a call, or set up an appointment in Fort Myers or Naples. He has a retirement simulator process that will get you to and through retirement. He's going to take a deep dive into your current portfolio to see what's really going on. And he's going to make adjustments or recommendations that can get you a better plan, a better strategy, because he is a fiduciary, which means his responsibility is to you. All you have to do is call the operator at 239-747-1077, or better yet, text the word VISIT, VISIT, to 239-747-1077. Alfie's going to do a deep dive and expose all the hidden fees in your portfolio. Could be eating up your returns. Make sure you're not taking undue risk for the amount of return that you're getting. Make sure you're allocated properly, diversified correctly. He is a strategist that's going to put together a comprehensive financial plan so that your financial house, can be in order. You owe it to yourself to meet with him. He only has room for 9 callers this week, so please pick up the phone right now before we go off the air, 239-747-1077, or text the word VISIT to that number.
Thanks, John. And like John said, what you're going to get is we're going to look at what you have and see. We're going to put it in our programs and see if what you really have. Are you paying too much in fees? What you're paying in fees. A lot of people don't even know what they're paying in fees. Are you diversified? Do you have a lot of international? Do you have a lot of things that you really shouldn't have? And we'll do a side-by-side comparison and show you what we can do for you. But mostly what we do is put a plan together for you that deals with income in any type of market, and then it deals with growing that money and keeping up with inflation. I don't know if you ever seen our TV show. It's called Saving the Investor. It's on NBC2 right after Meet the Press. We've been on there going on, I guess it's going close to 10 years now. We've been well over 10 years here on 92.5, and we always have Jake the Millennial helping us out. He's our producer for this radio show, and we also have my son Devin helping with our podcast here. So we appreciate all the help that we get because we do need it. Hope everybody has a fantastic weekend. Until next week, be blessed.